Greetings, members one and all of the Salivation Nation, with a very revealing story as a follow-up to my video about HSBC losing $200 million in one day. And this tells us about how they were able to secure 175 tons of gold to help support the SPDR Gold Trust GLD ETF. Let's explore! That's right. This is very interesting indeed. This comes to us from Zero Hedge, was forwarded to me by John Firth, an article by Tyler Durden. During March and April, amid global financial turmoil, unprecedented demand for physical gold, refinery closures, and a London lockdown, one question on the minds of many in the gold market was how HSBC London, the vault custodian of the SPDR Gold Trust, was consistently able to source huge amounts of gold bars to back the enormous inflows of the world's largest gold-backed exchange-traded fund. Now, I'm going to stop right there because if you go to usdebtclock.org, you will see that there's a lot more exchange-traded fund accounts than there are that back the metal itself. So why was there this rush and desperation to accumulate the physical to back the paper? It almost seems like they wouldn't need to, but maybe they're operating under a different system or somehow track this a different way. There's a lot I don't know about that process, but regardless, it's about 173 tons during the London lockdown. From the 23rd of March, which is the day that Boris Johnson triggered the UK and London lockdown, to the close of business on the 12th of May, the SPDR Gold Trust claims to have taken a massive inflow of 175 tons of gold bars, swelling its gold holdings from 908 tons to 1,083 tons. That's an addition of approximately 14,065 large good delivery gold bars since the 23rd of March, each weighing 400 troy ounces, which would take up to 29 stacks of pallets, each 6 pallets high, and is more than 3 times the amount of gold pallets labeled in the below photo. Look at that. That's pretty interesting to see. If we can blow that up, we can barely kind of see that that delivery there. That's amazing. 3 times that amount. Absolutely amazing. The time period of these GLD gold bar inflows was also not business as usual in the London gold market, despite what the London Bullion Market Association, known as the LBMA, may have you think. Coinciding as it did with London gold spot liquidity problems, LBMA market maker bid-ask spreads and COMEX futures spot gold spreads both reaching nearly $100 on the 24th of March, in a period in which no one else around the world was able to get their hands on physical gold in large quantities. It also came at a time in which HSBC now reveals that it had a $200 million one-day loss due to the HSB describes as unprecedented widening of the gold exchange for physical basis, reflecting COVID-19 related challenges in gold refining, transportation, which affected HSBC's gold leasing and financing businesses, and another gold hedging activity leading to mark-to-market losses. We covered that again in a video recently. I'll link to that video on the end screen of this video. So how did HSBC manage to source so much gold for the GLD during these times? Having gold in the right place at the right time, having a proverbial forklift truck to shunt 173 pallets of gold from one side of a secretive vault in London to the other during the London lockdown, or begging and borrowing the gold from anywhere it could find it? Well, Bank of England is your answer, folks. The Bank of England has been paramount. It's been where gold has been stored from around other European nations and alike for quite some time. On some recent days, it appears to have been the latter. For buried deep within the latest SPDR Gold Trust GLD quarter SEC filing 10Q filed on the 8th of May, we see the following admission from the trust sponsor, World Gold Trust Services, the U.S. subsidiary of the World Gold Council. Since the 15th of April 2020, gold was held by a sub-custodian, the Bank of England, and the greatest amount of gold held on April 27, 2020 was approximately 49.91 tons, or 4.4% of the trust gold. That means that during April, HSBC used nearly 46 tons of gold stored in the Bank of England gold vaults to add to the SPDR Gold Trust, instead of using gold at HSBC's own commercial London vault. So very interesting indeed. Here is a little image showing that from that report there. Very interesting. And why is this important? It's because it implies that there isn't enough gold in the HSBC's vault in London to fulfill SPDR Gold Trust basket creation requests from GLD authorized participants. And B, that gold which is ultimately borrowed central bank gold from the Bank of England is being used as a source for GLD gold holdings. And C, that there are physical gold float shortages in the London physical gold market, as well as liquidity problems of LBMA market makers in the London paper gold market. This tells us, that there's not enough physical to back the paper. And this, I guess, is just another example of it. Should it surprise any of us? No. So here's a tweet from Ronan Manley, who kind of has researched a lot of this stuff before it was posted here on Zero Heads. SPDR's Gold Trust gold bar inflows into the HSBC London vaults during the total lockdown are 11% of it was already in the vault, 5% gold brought into the vault, 15% gold at Bank of England, and 69% fictitious transfers. So that is a poll there, and so most people believe it's fictitious. So is this an open and shut case about HSBC's secretive vault? Looking first at the gold GLD creation process as follows. When authorized participants of the SPDR Gold Trust want new baskets of GLD shares to sell to investors, they transfer unallocated gold credit to the trust, after which HSBC London then allocates the equivalent physical gold from its vault inventory to the SPDR Gold Trust account. The fact that since mid-April, HSBC has directed its custodian, the Bank of England, to allocate gold bars stored in the Bank of England vaults to the SPDR Gold Trust when processing authorized participants' GLD creation request implies that HSBC London vault has not had sufficient gold inventory to provide, at a minimum, 45.91 tons gold bars to the SPDR Gold Trust as of the 27th of April. And because of this, it had to revert to using the gold of the GLD sub-custodian, which is the Bank of England. So this is from the GLD prospectus. The sub-custodians that the custodian currently uses are the Bank of England, the Bank of Nova Scotia, Scotia-Makata, which is now starting to wrap up business. They will soon. I posted a video about that as well. Or ICBC, Standard Bank London, JP Morgan Chase Bank, and UBS AG, all the big players here. The fact that HSBC had to source gold at the Bank of England sub-custodian and not from one of the commercial vaults also puts in doubt the ability of the other SPDR Gold Trust sub-custodians that we mentioned before as sources for providing sufficient physical gold to GLD during this time. Note that JP Morgan and ICB Standard have their own vaults in London, but Scotia and UBS do not. And Scotia is about to be out of the game. So that gold in the Bank of England vaults is ultimately borrowed central bank gold. Can be seen by the fact that the commercial bank members of the LBMA hold gold accounts at the Bank of England specifically so that they can engage in gold lending with central banks. The central banks lend the gold and the commercial banks borrow the gold. This is something that the Bank of England and the LBMA infamous, euphemistically referred to as liquidity provision. The Bank of England says we provide gold accounts to certain commercial firms that facilitate access for central banks to the London gold market. And the Bank of England also says that by offering allocated accounts to commercial banks, we allow central banks to access the liquidity of the London gold market and trade directly with the commercial banks. And the LBMA states the Bank of England offers gold custodial services to central banks and central commercial firms that facilitate central bank access to the liquidity of the London gold market. So very interesting. Those clearing members, without their own vault operations, Scotiabank and UBS utilize their accounts with one of the LBMA custodians or the Bank of England. The 5 commercial bank members of the Bullion Clearing Group, London Precious Metals Clearing Limited, HSBC, JP Morgan, ICB Standard, Scotia, and UBS also use these gold accounts at the Bank of England as part of their ability to call on each other for allocation of gold to help the clearing process. Kind of reminds you of swaps, I guess. Beyond the LPMCL members, the Bank of England also provides gold custody accounts to any LBMA bullion bank member engaging in gold lending and central bank gold storage customers of the Bank of England. For example, these bullion banks would include Goldman Sachs, Morgan Stanley, BNP Paribas, Citibank, and Standard Chartered, etc. And here we see one of the 8 to 10 Bank of England gold vaults, City of London. We've seen videos on this showing what this gold looks like, and Periodic Videos has done something about that as well. Why is all of this important to the SPDR Trust? Because the Bank of England vault gold held by commercial banks ultimately comes from central banks through gold lending or is for delivery back to central banks, which means when GLD holds 400-ounce gold bars at the Bank of England with the Bank of England as subcustodian, it is holding gold bars that either came from gold lending transactions or are ultimately going back to lending central banks. If the SPDR Gold Trust is now holding leased central bank gold as part of the gold holdings, that raises the issue of double counting, a situation in which same gold bars are claimed by 2 distinct parties. And that's why I think why we see some of this rehypothecation that we've talked about in prior videos too, where gold bars are melted down and resent, so they aren't traced. There's no real real sourcing of that, and hard to kind of account for it. The central bank, which lent the gold, still accounts for it on the balance sheet, and an exchange-traded gold-backed ETF, GLD, which thinks that it has a title to the same gold bars since they were allocated to GLD with the Bank of England. And it just shows how complex it is, these swaps and things like that. Belang P has talked about this type of thing as well, too. And it is convoluted. And you know what? And this all goes down to, we know, because of all this accounting, there's more room for things to get mucked up and screwed up in the process. And which is why I always encourage folks to get the physical. Let's get physical. I want to hear your gold talk. You know what I mean? So anyways, an admission in an official SEC filing with the SPDR Gold Trust uses gold at the Bank of England is not unprecedented, but it is rare enough that it has not happened since 2016 after the SEC directed the GLD sponsor World Gold Trust Services to specifically divulge the use of subcustodian, since the SEC claimed subcustodian holdings at a risk to the trust. And there's an article on it, and here is the letter here. So anyways, it is in depth here. There's a lot more that goes to this. Let's take a look at the conclusion for all this. It's interesting to note that the current large flows of the SPDR Gold Trust began on Monday, the 23rd of March. This is the same day that the UK and London went into lockdown. Prices between the COMEX gold futures and London spot price began to diverge wildly. In fact, they really are just now starting to come back. Bid-ask spot price spreads quoted by the LBMA makers diverge wildly. The consistent and large inflows into the SPDR Gold Trust starting on the 23rd of March all the way through April and into the May with correspond to the period of persistent and wide spreads between COMEX and futures and gold prices and London spot gold prices when the LBMA in unprecedented fashion made various attempts to reassure that all was okay in the London gold market. I think this tells us here what's going on here. We got the COMEX and the LBMA propping up the gold market here, which is essentially dead. This is from the Weekend at Bernie's movie here. The biggest spread between COMEX and London spot on 24th of March, when the contango was was on point $96. The spread remained wide between 60 and 50 until the 25th of March, then contracted slightly in the 30 range over the rest of March. It was during this time the HSBC made its huge loss, which it describes in another filing here as delivery disruptions in the gold market, which became highly illiquid on news of refinery closings. So yeah, I mean, to tell you what, this is very interesting how this is all playing out. Cracks in the system, and in a crisis like this, is the best way for them to try to hide it or what have you? I don't know. It certainly is going to be interesting to see what goes on, which is why gold could be very precarious, and to see where things go from here. As stable as the gold price has been, I think this is something that could shoot higher as people lose faith in the exchange traded funds and want to go into the actual physical metal. The start of April, the spot to COMEX contango was in the 20-25 range, but expanded to the 40 range from 6 to April and exploded again for the whole week before Easter to between 60 and 80 bucks. The contango remained high on Monday, the 13th of April, at over 65 when GLD started sourcing its gold from gold holdings in the Bank of England vaults. The latest GLD 10Q filing says that SPDR Gold Trust began holding gold bars in the Bank of England beginning on the 15th of April. And while this is a delivery date of physical gold into the trust, it could be based on trades a few days earlier, which would put the initial transactions on the days around Easter, the 12th of April. With this new revelation that the SPDR Gold Trust began allocating gold bars at the Bank of England during the very same time as market maker liquidity broke in the London gold market, it seems that the liquidity problem of the LBMA banks are both in physical gold and in paper gold, which would make sense seeing as the giant paper gold trading pyramid sits atop the tiny foundations of the physical gold market. And that's just it. The paper gold. It is showing there's a lot out there at the bottom of the paper of the actual physical gold market. And was the 27th of April the date in which the SPDR Gold Trust said it held 45.91 tons of gold at the Bank of England merely the latest date the GLD accountants ran a query for their filing before signing it off? What about since April 27th? How low really is the London gold afloat? Since the 27th of April, another 35 tons of gold have been added to the Mammoth GLD ETF. Where did the extra 35 tons of gold come from? If this were a bet, the odds on this gold being at the Bank of England would surely be less than even a surefire bet. Very interesting. And as small as that is, and as big as the paper market is there, they're saying it's magnified multiple times in the silver market, which if somebody does some research about that and in-depth diving and requesting documents there, that could be a bigger fish to fry. We shall see. A lot to go through, a lot to digest here for sure in this, but this is proof positive why you and I should be accumulating the physical metal. Gold, the physical, will never lie to you. Make sure you understand that. That's the message to take home from here. Gold never lies, but everything around it, all the transactions, all the trades, all the borrowing, all the swaps, well, there's humans involved, and that could be a lie. Post your thoughts below. Thanks again to John Firth for sending this along to me, and I'm going to encourage you to continue to watch and stay tuned because I do post videos on a daily basis, and I want to encourage you to please rate, share, comment, and subscribe.